Don't go contrarian with this distressed bank stock. First Republic has so far avoided becoming the next victim of the current banking crisis. Don't assume that the San Francisco-based bank is out of the woods. At risk of falling further, now is not the time to go contrarian on First Republic stock. Let's dive in. Time to bottom fish First Republic stock? Not so fast. Welcome to Timely Investment Research. As you likely know, First Republic has been making headlines lately and not in a good way. Over the past month, First Republic stock has fallen by more than 88%. The fears driving these declines have been well-founded. Following the collapse of SVB Financial Silicon Valley Bank, or SVB, subsidiary, the San Francisco-based bank, which caters to similar clients as SVB, appeared to be the next potential victim of the current banking crisis. In the aftermath of SVB's collapse, First Republic experienced a massive outflow of uninsured deposits. To quell bank failure fears, it secured a rescue package from several big banks, comprising $30 billion in new uninsured deposits. However, despite this rescue, don't assume it's all uphill from here for First Republic. There's a reason shares still trade at only a little over a tenth of their value from just a month ago. Why First Republic stock trades at fire sale prices? If you are unaware of the situation with First Republic, you may wonder why the bank, despite replenishing its deposit base, has fallen and stayed at fire sale prices. Right now, the stock trades for less than 20% of book value and for less than 2 times reported 2022 earnings. Before you run out and buy First Republic stock hoping you are getting $1 for 20 cents, keep in mind these metrics are on past results. These figures are not very relevant when it comes to the bank's current fiscal state. For starters, First Republic's true book value is likely far less than what was reported in its most recent financials, $75.38 per share. The further rise in interest rates has resulted in additional unrealized loan losses. While the bank generated around $8.25 per share in earnings last year, don't expect results in 2023 to come anywhere close to this figure. In fact, between loan losses, along with the fact that its rescue deposits and increased Federal Reserve borrowing will squeeze its net interest margin, FRC is likely to report negative earnings for 2023. The risk of further losses. It's clear that the true book value for First Republic stock is far less than the figure reported as of December 31, 2022. The question is how much less? Some may believe that First Republic's price decline has accounted for unrealized loan losses and then some. However, I wouldn't quickly jump to that conclusion. According to Reuters, analysts estimate losses could be as much as $13.5 billion. That figure exceeds First Republic's tangible book value at the end of 2021, $13.4 billion. Even if unrealized losses are less than that, First Republic's underlying value could continue to drop. For example, as Reuters also reported, a majority of First Republic's loan book comprises jumbo single-family mortgages. The bank may have to realize even larger losses if it needs to sell some of these loans in the near term. There's a strong chance of this happening, given that the aforementioned big bank deposits are short-term in nature. Otherwise, to shore up its liquidity, First Republic may need to raise additional equity, either by converting some of these recent deposits into capital or from receiving a separate capital infusion. The resultant dilution would place additional pressure on the stock. The verdict. Although First Republic may look oversold on the surface, a closer look signals otherwise. When you factor in unrealized loan losses, First Republic could trade at fair value or at a steep premium to the current market value of its loan portfolio. Even in the event First Republic can secure the capital needed to hold onto its underwater loans to maturity, it could still be a long slog back to profitability. Bearing a return to a low interest rate environment, the bank may have to contend with slim net interest margins. Any way you slice it, there's far more pointing to additional declines than even a partial recovery. With this, going contrarian on First Republic stock is today, without doubt, an unwise wager. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.